Interestingly enough, what you've got is you've got numbers coming out in the States that indicate the economy is going to recession. For example, you've got the ISM, Institute of Supply Management Index, came out last week, again showing a downturn overall in the economy. That is a survey of 300 purchasing managers, and it's very strange that that's showing a downturn, and yet the US markets are all up. It looks like they just want to ignore any particular bad news, and it looks like they want to finish 2023 on a positive note after finishing 2022 in a bear market. Also look at the DXY, and the DXY is the dollar index. It indicates which way the dollar is moving, whether it's moving up or moving down. And there's a clear divergence, a clear moving apart between the dollar index and the 10-year yields. Dollar index, which is where the strength of the dollar looks like it's going down, or it is continuing down, and not much is going to save it at this particular stage. Even though interest rates may go up in the States by 2 times or 3 times, in my opinion, they're going to go up 3 times, but that's only my opinion. What you've got is a particular selling off of the dollar, not significantly, it's just not in high demand. What would push the dollar up would be some sort of geopolitical crisis, but that would push it up for a short period of time. Or what else would push it up would be a complete change in inflation and the overall outlook of the inflation outlook. Let's rephrase that again. The overall inflation outlook would change the movement of the dollar. At the moment, the outlook on inflation is not particularly serious on a headline basis as far as the markets are concerned. So in the foreign exchange, the dollar is going down. Look at the pound, which is an interesting one. The pound is going up because the outlook on interest rates rising in the UK is much greater than the outlook of interest rates rising in the US. So you're probably going to have cable, which is pound dollar, moving all the way up to 130, testing the 130 level, and even moving beyond that. So keep an eye on that if you're a forex trader. Gold traders. Now, gold has not really moved a lot over the last 2 or 3 days. It's hovering around the 1920 level or 1935 to 1940 level, still trending down. Okay, there's no major movement going to happen in gold unless it breaks out of this pattern, and the pattern is trending down all the way to test the 1910 1900 level. If it falls below that, then you're going to see it down at 1890 or even below that. Okay, so keep an eye on gold. Those who are gold traders, but the overall trend line is down on gold. Equity markets. Keep an eye on equity markets. Equity markets only want to go up, as I said earlier on at the beginning of this production. Equity markets want to go up and are discounting, disregarding, ignoring any type of bad news. So that's put aside. Looking at the overall macro picture, you've got a lot of companies that are going bust. You've got higher interest rates on mortgages. You've got businesses that are in trouble. You've got economic reports coming out indicating recession. You've got the 2-year and 10-year yields on the US Treasury at a massive divergence, which is a lead indicator of a recession, has never failed as an indicator of recession. And yet, within the US, there seems to be some sort of contrived ignorance or contrived disregards, pushing aside, let's march forward when it comes to these particular equity markets. And it could be from the Fed, or could be from the Biden administration, could be the US Treasury, could be Wall Street. All of them could be in cahoots together in order to give the feeling that the economy is doing well, give the feeling that your investments are doing well, and therefore there won't be they'll buy themselves or trade themselves out of the recession. What's going to happen is that eventually people are going to realize that they've been fooled, and there is a recession at the moment, and there will be a major recession coming along. Talking about recession, I've got to talk about the NASDAQ. I said it yesterday, the 7 major companies that form 55% of the NASDAQ, thanks to Phil, who sent me that information. And the 2 top ones are Microsoft and Apple. Then you got Nvidia and Meta. I mentioned all this yesterday. And that is forming a bubble. There's a major bubble in the NASDAQ, and that's going to pop. And when it does pop, we are talking about, at least in my opinion, an immediate 10% fall, and then over the 12 to 18 months, anywhere between 25 to 30% fall in the Nasdaq, and obviously that'll have impact on other equity markets and other indices. So keep an eye on that, because it's very much AI ChatGPT driven. You just can't take your eyes off that when it's coming to a bubble. But as far as the markets are concerned, what they're looking to do is pull the small trader in. By pulling him in, eventually they're just going to spit him out, and the banks are going to make the most money. So that is something that's quite important. You've got GDP out in the UK likely to come in negative, so that is also going to impact that's going to impact the FTSE and impact the UK residents and UK businesses who are having negative GDP, and that's going to put a lot of pressure on Andrew Bailey as to how much they have to raise interest rates next time, because that will push them more into a recession. But of the G7 companies, G7 countries, the UK is lagging the most and is in the most danger of going into a significant recession. I personally think Germany is actually in most danger of going into a significant recession, but at the moment that's pushed aside and they're focusing just on the UK. As far as Bitcoin is concerned, it's hovering around the 30,000 level, not really going anywhere significantly, but looks like it's building up for a major move up. That's my opinion. Not a massive fan of cryptos, not a massive fan of Bitcoin, very much a gambling asset, a gambling tool, but there's a hell of a lot of people believe in Bitcoin, and you can't ignore it. It's part of the economy and part of the asset class. This is Mayor Walensky with Driving Markets. Have a good day, and don't forget to subscribe, share, comment, feedback. Speak to you soon.